Hello, friends. This is Brant Spessart from Steward Strategies, and it is my pleasure to present our third quarter economic review. We believe that an informed client is our best client so that you can be a good steward and make wise decisions. And that's why we share information through webinars, newsletters, and just personal client meetings because we truly believe that knowledge is power. We all want to be wise with our decision making, and that is part of stewardship. Whether you're making decisions that are in your best interest or we're giving you advice that is in your best interest. An educated client is our best client. So when it comes to financial planning, we always have to remember that there are more areas to financial planning than just investments. Retirement planning, investment planning, tax planning, protection planning, estate planning, and also generosity. Decisions we make in one area of our financial plan may affect others, so it's always good to have a comprehensive look and a thoughtful analysis of what are the results of the actions we're taking, or what should we consider doing, and what will the effects on the rest of my financial plan be. So the stock market has definitely had a very up and down year. We've seen a lot of volatility, but resilience illustrates the ability to withstand challenges and recover quickly from difficult conditions. And the U.S. equity market over the past year has been just that. In fact, if we look at third quarter alone, the S&P was up over 7%. The Dow was up over 5%. It's been a fantastic year from start to finish so far through the end of third quarter, but we have had a lot of volatility. There's been a lot of headlines that a lot of us have had to endure. But as long as we have kept ourselves from hitting the panic button, investors have done fantastic. Now, inflation continues to be one of those headlines. It is still a concern. Target inflation, if you remember, we've talked about this before, is around 2%. So inflation's in a lot better spot than it was just a couple of years ago, but it is still a little bit higher than what the Fed prefers. Interest rates have had some adjustments. The Fed's met a few times this year and did not make any changes, but in September, the Fed did decrease interest rates. There's 2 more meetings between now and the end of the year, the end of October, possibly by the time you watch this video, and then also in December. What does that mean, though, when the Fed cuts interest rates? Well, there's reasons that the Fed uses interest rates to fight inflation, and also depending on how jobs look as far as unemployment. But when they do raise or lower rates, it affects our portfolio. If you have any conservative portion to your portfolio, you may have bonds or cash in your portfolio. And when the Fed lowers interest rates, that lowers the rates for that particular part of a portfolio. Right now, the 30-year Treasury is paying about 4.7%. The 5 years about 3.7%. Those numbers are a little bit lower than what they were a couple months ago and earlier in the year. But when it comes to safety, most of us really think about our safe money being in the bank, in a money market, or a CD. And right now, a 12-month CD, national average is about 2%. Money market, depending on where you're banking, maybe about 0.5%. Some credit unions, some online opportunities have high yield savings. But unfortunately, we're not seeing the same type of rates we were just 12 months ago. But we will continue to monitor this and keep this up to date. But still, emergency funds, money that's going to be spent in the near term, needs to be kept safe. It needs to be in a liquid type account like a money market, a savings, or even of a CD if it's a little bit more of a long-term commitment for something you need to keep safe. But what about the stock market? We know that interest rates have dropped. Bonds and cash are paying a little less yield. Stock markets had a very volatile, but has produced really good results so far this year. What about between now and the end of the year? Well, if we look at historically over the past 75 years, and we just look at the various quarters, historically, Fourth quarter has been volatile, but has also been one of the better yielding quarters for the market. So if we look at the S&P 500 since 1950, the fourth quarter of the year has produced excellent results on average. Now, this is not a promise or a guarantee or forecasting, but if we just go by historical measurements, Q4 generally is a pretty good quarter. Now, I may be jinxing us, and you can see it right here. The possibility of posting a quarterly gain is almost 80% for Q4. But here's the one thing we have to keep in mind. Volatility is short term. It is a fact that the market goes up and down weekly, monthly, quarterly, yearly. But if you look at this chart right here, just going back the past 45 years, what has the market done over the past 40 years, 30 years, 20 years, 10 years? From start to finish, it's grown. But it's uncomfortable along the way. 2025 has shown us that with the headlines that we've seen this year. But for long-term investors that are not investing for the headlines, but they're investing for results to provide for retirement, children's education, creating or leaving a legacy, or building those resources so that there's more to spend, more to give, more to enjoy, the equity markets have produced tremendous results. But when it comes to investing, we have to focus on the long term. So I'm keeping this short, but I appreciate you investing some time with me today. But here's our key takeaways. Equity markets have reached record highs. And by the time you watch this, we may be at another record high. But in September, the Fed cut rates. Inflation stayed about the same, but it's still a little higher than target. And when the Fed does change interest rates, it does affect the bond market. Historically, the fourth quarter has been the stronger quarter. We are optimistic, but I think we all should always proceed with caution. Understand that volatility is part of the investment experience. And we will continue to monitor the market's changes as far as tax rules, estate planning. We are here for you to give you advice that is in you and your family's best interest so that you can focus on your goals and objectives, and we'll make sure that your plan is appropriate. When it comes to investing, we have to focus on our long-term goals and stay the course. Sometimes the best action to take is stay in the course. We are here for you. Please reach out to your wealth manager, your client service team member if you ever have questions or needs. A lot of activity sometimes comes up between now and the end of the year, whether it's charitable giving, tax needs, required minimum distributions, or if you just want to have a quick conversation to see how your financial plan looks, how your investments look year to date, please do not hesitate to reach out to us. And we're so honored and blessed that many of you continue to refer friends and family members to us. I just want to say thank you. Our best clients come from our best clients. And we love our Steward Wealth Strategies ambassadors. And if you would like to be an ambassador, please keep us in mind. If you have somebody that you think would be a great fit or a great potential person for us to have a conversation with, or if there's ever a group that you think it would be valuable to have a member of the Steward Wealth Strategies team come and visit and speak at. If you help host Financial Peace University, we would be honored to be part of that. Please continue to follow us on social media. And as always, thank you for your trust. We love our clients. It's an honor to be able to serve you and your family, and we truly feel blessed to have you in our lives. I hope that all of you have a great rest of the year if we don't talk to you beforehand. God bless you and enjoy the holidays. Thank you.